I have so many questions about charts and no one to help me. If only there was a place I could go to learn which doesn't cost a fortune.
There is such a place. It's my Patreon. It's £7.50 a month and you get 2 live streams a week. Ask me anything you like about any chart that you want.
What about trading platforms?
Well, in the video description I've got a link for all the best ones and you can get up to 20% off all your trading fees for life.
Thanks CryptoClick, you the man bro.
Hello everybody, welcome back. Let's have a look at Bitcoin and a bit of an overview of the market generally speaking. Normally I would have had this video out by now, but I had to take the kid to nursery and the other one to summer club on a bike and a scooter, which obviously took forever. So yeah, a little bit later, but basically it's no different to yesterday's video, which was that the short-term time frames offered a small amount of downside potentially with certain areas of invalidation and validation. So we're talking basically 22,500. Breaking down from there, you have one last little area of 22,200. This is all based on previous supports, but also moving averages as well. And if they start to break, then yeah, I would entertain the idea of a full meltdown back to the lower side of this range. So 22,000 was based on the 4-hourly 200 exponential, which is still 22,500, and obviously the daily as well, which you just saw as well. There was also the 3 daily. There was a lot going on around those areas, and we saw a test just today, in fact, ever so slightly at that 21 exponential. If we just turn on the Bollinger Bands, we can probably see where the Bollinger Band center is as well. So the 20 simple moving average is also floating around there. Let's get rid of those Bollinger Bands. Chart's messy enough as it is. So as far as the criteria for breaking down is concerned, or I suppose, you know, looking for buy the dip if you have the balls for that kind of thing, that is the area. We may have front run that area now, but we're still in, I suppose, no man's land. Now, coming down to retest or maybe just front run those areas, and we see a bit of a green candle going on as we speak right now. The main thing to focus on is, can it break out from this previous high to create a new high? And I would say that area is this area here. So we've got a lot of 4-hourly candle bodies, more or less, plus these tops. There's a lot going on around this area, which is 23,800. Breaking above, maintaining above, maybe even retesting a support and getting moving averages on the 4-hourly at least to cross above there will likely have the continuation that we're looking for, because we were talking about this on the higher term time frames. We'll start with the 3-day and work our way down. That the momentum on the higher term time frames is still one of an uptrend. You know, we've got no bearish divergence on the what happened over there on the money flow index. Nothing like that. In fact, just going from strength to strength. We've got the trend formed as well. This line here is for the dailies. Don't worry about that. But we've still got a trend of momentum formed on the RSI and on the MACD. So the momentum on the higher term time frames is still quite good. Weekly even looking relatively good as well. You know, looking for a positive tick on the histogram maybe as early as this week, maybe next week. I mean, we are only Wednesday. There's a lot to go on this. This is a spot chart, so obviously we've got till Sunday. So the main criteria would be for further upside, we have to break above 23,850, and not just a little break, because we've seen that is possible to do that. We want to see a trend begin above there. So this isn't something that I'll be looking for, you know, to take place and be confirmed in a day. We can get above there. What we want to see is moving averages of significance get above there too, to create much more strength and support of that exact level. And then I would say it wouldn't take a great deal for that point now to actually reach all the way up to the next target, 26,600, and that's the target we've had on our sites for a little while. And look, I mean, it is only a measly 12%, just less than 12% from breaking out from that level. You know, people think that that's like impossible, but really it's not. And I would actually extend this target further on to the summer lows, 28, 29, 30, and if that were to break, straight up to 40. So I don't, I don't say this for no reason. I mean, it generally is the kind of vibe, but just so people can understand, because I know many of you, I've seen the statistics on my channel. 75% of you are subscribers, which is good, but there's always that 25% that aren't, and there's nothing wrong with that, but they just, I think that because they don't follow and understand what it is that I'm talking about, they just hear numbers. So they hear the word 40k and 40,000, and they'll look back next week, it's not 40k, and they'll, yeah, or the opposite will happen. They'll say, you said it was going to break down to 19k. And I'll be like, no, I didn't say any of that. I said what we need to do, these are validation ranges, right? So we have to break and hold above here to go to 30 to 40k potentially. We have to break down from here to go down to 19k. All of that is the situation. Right now, we're floating around in like a no man's land kind of area, making it, you know, very difficult, not impossible, but very difficult to make a decision on what's going on, because we could expect quite easily a rejection from this level, or a support and a bounce from this level, which basically makes this trading range, as we speak right this very moment in time, potentially a move up by 2.5%, which is nothing, or a breakdown to the tune of what, 3.5%. So right this very moment in time, it is trying to decide what it wants to do. And so even though we've got targets to the up and targets to the down, this is like a no man's land kind of area. Although I do favour the higher term time frame momentum, which is something something worth talking about. So let's have a look at the Nasdaq. This is Nasdaq, and it's effectively a pre-market kind of vibe. We need traditional markets to open, so we'll wait for the Americans to wake up and start trading. So that's not going to happen for a little while, but this is the best we can do in the short term. So on a 4-hourly, it looks quite good, I have to say. It does look quite good. Golden cross, moving averages all in the appropriate place. We are cooling off when we're talking about momentum, so it wouldn't surprise me in the slightest if we do pull back a little before we start to move up. The Bollinger Bands here are tightening on the 4-hourly. They're very tight. Look at the pinch on this thing. So this normally means that in a period of low volatility, which is what this is, from the bottom of that band to the top of the band on the 4-hourly, is only 1.2%. That's small, so we are looking for a big move on traditional markets. You know, we had the whole situation over yesterday with Pelosi and buddy Taiwan. That didn't really affect markets. You know, there was the anticipation that it would, just because it's a silly thing to do, and you know, with I suppose like a Pandora's box type of outcome potentially. I mean, who knows? And the markets failed to react to that, whether it's good or bad. They've just kind of stayed static. In fact, we've been static for the whole of this trading week, really. We've just been flat as a bloody pancake. And now we are looking for this to actually break out or down. So the 4-hourly is actually, you know, quite a strong trend, I would say, and this is all still very much in keeping with the everything bounce that we took part on about 8 weeks ago, and we're still, you know, 50% in on that trade. So if we think about Nasdaq, you know, with its general chart rather than that silly pre-market 24-hour stuff, then yeah, we've still got a little further to run as far as the everything bounce is concerned, up to this major area of trend line. And if we can break out of there, then we go straight back up to maybe as high as, you know, 15,000. This is all really good for Bitcoin, but we do have bearish divergence. Although this has technically been cancelled out mostly, it's still relatively good as far as the trend is concerned, but giant descending triangle, so bearish formation that we're still within, so we have to expect rejection from it, really. And if we do get rejection there, obviously everything gets rejected. But outside of that, you know, the descending triangles don't go on forever. They do break, and of course we look for a break within a 70% area of that for continuation. So if we do move up to this level and break out from it, then we move up to this area where we could maybe even confirm a higher high. If we don't, it's no big deal, just a little bit more continuation is fine. Let's have a look at the Dixie. So we got that bounce yesterday on that exactly on that area, and moved up more or less to the 106.6. So that's working out as well. This is a strong uptrend with hidden bullish divergence in play, so I would expect this to break out of here one way or another. But immediately, as we are looking at it right now, we'll turn these on. We are getting a rejection from that 21 exponential moving average, which is a good idea, yeah, and the 10 exponential, which is good as well. So we moved all the way up to there yesterday. Now we're back down below it. Maybe we can continue back down, maybe even break down a little lower, maybe before we carry on with this significant uptrend. And in my opinion, you know, with the state of the economy and the financial reserve monetary policies and the European situation as well, there's no reason why this can't make it up to like 112. It seems pretty likely. And again, you know, for the record, we were talking about how this was bullish back in September last year. So it's going to be a bullish year for the dollar, and everyone else was going, "You're wrong, you're wrong. Money printers are on. Dollar's going to die. I've been told on Twitter." it was an uptrend in the making, and it's an uptrend strengthening still. There's no real signs of weakness on this, and why should there be? Right, so that is basically it in a nutshell. So focus on Bitcoin. Bitcoin's chart is okay, like I say, but we do need to break and hold above 23,800, build a base above there for maybe the rest of the week for continuation, which could take us up to the 30, maybe even 40k zone. But right this very moment in time, as I've specified, we're in a very small area, like the Nasdaq really, and we're looking to break one way or another. My preference is a breakout, but at this stage now, there's no confirmation of the breakout. The breakout confirmations are as stated. So even though I do favour it based on the long-term timeframes and the momentum that's not dwindling on the 3-day and the weekly, yeah, I favour the upside. But it's still a no trade zone at this very moment in time. Right, thanks for watching, guys. Hope you have a nice day. Take it easy.